I kept a copy of that. So in case I have
Okay,
to
great. Yeah, we're now live.
Okay.
We're now live.
I like to be live.
Hi, Facebook audience. This is Melvina Fredson-Cole, and I'm here with you on Think Beyond the Keys. Now, I am excited this week. As you know, there's been a lot of fire, and I have someone really has a lot of years of experience that I'm going to chat with today about fire insurance, and especially the California fires and what's going on and how we can get insurance. And I'm excited to introduce to you David Castillo, the insurance guy. Did I do that right, David?
Yes, that's great. Thank you.
Thank you, Dave. And so I'm here, and like there's been a lot of fires, and people are buying homes, not necessarily along the fire lines, right? But maybe close to it, or a few miles away from a fire station, and they're not being able to buy fire insurance, right? And
Very true.
So what's about that, and what can they do?
So I was just looking at the SCU fire, which is one of the restricted areas. And there must have been about 30 zip codes that are restricted right now. So in fact, I was quoting someone who is with a different carrier, and I was ready to issue the policy, but I cannot. The fire is 30% contained. So it needs to be contained probably 70% before any restrictions are lifted. So yeah, it has an impact, sometimes not even that close to the fire. It could be 10 or 15, 20 miles from the fire line. And there are going to be restrictions because the wind might be blowing in that direction, and fire could spread pretty fast. Yeah.
So those people who like are in escrow right now, and you know that the lenders do require, homeowners insurance, which normally covers fire, but because of this, it doesn't. They can't close, right? They won't be able to lend them unless they.
Yes. Throughout my career, we've had dilemmas like this, I think 3 or 4 different times, where it really has impacted home buyers, impacted real estate agents, lenders, title officers, title companies, termite people. Anybody involved with a transaction of a home is going to be impacted. Yeah. The one prior to the fires, if I can recollect, was the earthquake moratorium, and now it's fires. So what your buyers need to do is first check with whoever they're used to doing business with, insurance business, and try to see if hopefully their property is not in a restricted zone. If it is, we cannot help. So we'd have to use an alternative insurance carrier, which is California Fair Plan, which I mentioned was established, I think, in 1968 due to fires and civil unrest back in the 60s. So there you go, a little bit of history on the California Fair Plan. So California Fair Plan, for whatever reason, has no restrictions like Farmers, State Farm, Allstate, AAA. Yeah.
So California Fair Plan, I was reading about it a little bit, like all these insurance companies come together and they pull from that, and they insure people that normally are uninsurable, like right now. Is that how it works?
Yeah, and I could tell that you were doing your homework, Melvina, because you were right on there. California Fair Plan is a pool of insurance carriers. It's not CFP is not, I guess, a business from what I read. It's a pool of insurance companies who will extend coverage during these times, and extend coverage again, not just during fires or moratoriums due to, for example, earthquakes, but they will also extend coverage to hard to place businesses. Hard to place because they're in a forested area. They've had maybe too many claims, maybe undesirable neighborhood, maybe things out of their control.
So at least that's something that buyers can get temporarily, pay, so at least they can close on their home. Am I right?
Yes, it's a very good reprieve, let me tell you, because it'll save, your business, your clients, the lending business, the title business. It's helpful all the way. In my business, it's helpful all the way around.
And just a little bit of history before we finish with, how the California FAIR Plan started. It also started because of redlining, where insurances did not want to insure homes that in poor neighborhoods or certain areas that they were redlining. So that was also created for that, right?
Yeah, that is correct.
Sorry.
Correct. Yeah.
Wow.
Most carriers now are not allowed to do that because of the strong Department of Insurance that we have in California, very consumer oriented. So, but mostly what they are able to do is cases like this, fire restrictions, and maybe too many water claims, or maybe wood shake roof, which is a greater risk than a tile roof. So yeah, FAIR Plan will provide coverages in those examples.
I also noticed that even though that they're there, that they can cover when other insurers cannot cover, there's also restrictions. Not all structures. Do they cover? Are they still covering homes that were built more than 25 years ago? Can they still cover them?
They'll cover homes that are 100 years old.
Oh.
They'll cover. I think what you're referring to, and I know you did your homework. So they will not offer extended replacement for homes that are over 25 years old, nor to mobile homes, town homes, renters insurance. I believe those are the restrictions for adding extended replacement. But the way to work around that is, in the 40 years that I've been in business, and all the claims that we've had, fire claims, major losses, everybody who had those claims either reached their limit or exceeded their limit. Do you know what that means?
No.
It means that you can never have enough insurance. You can never have enough insurance. They either expired their limits of insurance, and then they had to pay out of pocket. So yeah, a lot of them didn't have enough insurance. Wow. And that is, when people buy, and we're all consumers at one time. We want to save money, right? Yeah. But at what cost? Well, usually the coverage, right? We want less coverage because we want less premium. So whenever you write a California FAIR Plan policy, you have to add extra coverage, just because there isn't that extra 25% extended to the dwelling in case of a fire. So go ahead.
So if I'm a client, I come to you and I want the fire insurance, obviously. And so what is the basic I can get? Because in order for me to extend, I need to know what the basic is, right? So if I said, okay, I'm here, what would you tell me? I want the basic.
Yes. So to be able to close a transaction, whenever the property is financed, and 99% of the properties are financed, very few are cash deals, but they're out there. When you have a cash deal, you do what you want. Go without insurance, or that's up to you. But when it's financed, the lender dictates that you have to have a minimum of fire coverage. Yeah. Fire, like the house burns from a forest fire. The house burns from a kitchen fire. The house burns from an electrical fire. A lightning. That's basically what they need. It's not advisable to carry just the minimum. You should carry, as you saw in our notes, coverage not just for fire, but for wind, rain, lightning, falling aircraft, damage by vehicles if you live in a corner lot. Yeah, that's the recommended coverage, and most agents will provide that coverage. It's a given. You have to have, we call it in our business, extended coverage.
Okay.
And you can get that through the California Fair Plan.
Awesome.
What you cannot get through the California Fair Plan is theft for your contents, nor water damage.
Whoa, wow.
So there we can start talking about the DIC.
Yeah.
I saw that most people don't know what DIC means, that it's difference in conditions.
Mm-hmm.
It's a underlying policy to the California Fair Plan basic policy. It'll give you liability, which you should have as a homeowner, water damage, theft, most important, liability in case you're sued as a homeowner,
Yeah.
and hotel expense.
So the hotel expense, how much does it pay for? Is it per night stay? Like they will pay up to certain nights, or just a flat rate when these things happen?
Let me give you an example. The average home in the Bay Area, let's say it's covered for $400,000. The hotel expense, let me see if I got this correct, is usually about 35,000. I'm sorry, 35%. Some are 50%. So you would have about 140,000 on the average homeowner policy, 140,000 for hotel expense, hotel and meals.
Oh, wow.
Very important, very important.
Mm-hmm.
Yeah.
Hotel and wow. So this is really important to have. And this comes with the fire insurance. It's not extra.
Yeah, this comes with the standard homeowner policy, not the California Fair Plan, but it would come with the DIC policy if you were to add it.
Oh, it has to be added.
Yeah, keep in mind a footnote here, a disclaimer. You cannot add the DIC right now.
Oh.
Right now with fire restrictions, if that property is in a restricted area, you cannot write the DIC. So you'd have to at least try to get liability, Yes.
Okay. So right now, a homeowner can get the fire, which is just the purely fire, and then they can get some other insurance for liability. So at least they're partially covered under that.
Yes,
wow. That and I just want to tell my audience, because they're from all over the United States, that each state also may have like something that we have, like the California. It may not be named the same, but it's state. And if you want to know, just contact me or Dave, and we can help you guys out that are listening also. And his contact is right there in the notes in the comment section. And you guys know how to get me. You can DM me on that. So it is not only for fire here in California. This is something that, you know, yours will be state specific, obviously, because but here in California, as everyone know, we've been having all these fires, and it is an issue because in the fires for 2018, 2019, the insurance companies really suffered for billions and billions of dollars that they paid out, and so they don't want to cover anymore. Obviously, they really don't, and so this is a lifesaver for people who need it, and in order to close on a home. Or even if they decide they just want that added assurance. Am I right? Correct me if I'm wrong, Dave. If this person doesn't have fire insurance, they live in their home, they already own their home, but they just want that added insurance that I want to be covered just in case. Can they get this insurance also? So
are you referring to
CFP?
California Fair Plan or the DIC?
No, I'm not sure. Okay, for example, I'm a customer. I come to you, I already have my home.
Yes.
But because of everything that's been going on, my policy has expired and my insurer will not renew it because of, they don't want to take the risk. They will not renew it.
Yes.
Can I, would you recommend the California Fire?
Yes, indeed. Yeah, yes. Right away. When you're fortunate enough to own your home, people say, well, I don't need insurance anymore. that is so incorrect.
Yeah.
When you own your home outright, you're the bank. You
Mhm.
stand to lose a lot more than if you have a 90% loan. So yeah, they're good candidates. People like that are good candidates for earthquake insurance in California, and of course fire.
Okay.
So yeah.
Yeah. So the regular homeowners insurance in California will not cover fire and, well, in certain areas, it will not cover fire and earthquake unless they add it or get it separate. Is that right?
Yeah, so the basic homeowner policy, even a California Fair Plan or standard homeowners from Farmers, Allstate, AAA, they cover fire, wind, rain, lightning, off the top of my head, falling aircraft, windstorm, but not earthquake nor flood. Not earthquake nor flood. Those are separate policies.
Wow. Thank you so much. And it is unfortunate because in the beginning you said that there's some zip codes, 30 zip codes, that they will not even, so even the California Fair Plan will not cover these zip codes, or will they cover these zip codes?
They will. They will
they
cover
will.
those zip codes. Yes, yes, yes. They have California Fair Plan, very liberal in issuing policies, so they have no restrictions. We have had policies declined, mostly for housekeeping reasons, just hoarders or I don't know, junk collectors, whatever you want to call them.
Oh, really?
Few cases, yes, they needed to clean up, you know. So every property that is issued through the California Fair Plan, every property that is issued through Farmers, State Farm, AAA, they will be inspected usually within 30 days of issuing the policy. So what are they looking for? Any type of fire hazard or any type of liability hazard. So be prepared to make your home look nice.
Yeah. Well, and also maybe your surroundings, if you have a lot of junk outside and close to trees, right?
Yeah, close to trees, exactly. Yes.
So is there any stipulation that trees should not be like maybe certain distance from your house, or it would be disqualified? Have you ever came across something like that?
Oh man, plenty of time, plenty of times. I've seen it often. I've seen where people are declined because too many cars, abandoned cars on the property, appliances discarded on the property. So yeah, insurance companies will usually decline those.
So I know people are listening and they're like, yes, this sounds good, but how much is it gonna cost me? You know, relative, you know, what are we looking at as cost?
Yeah, yes. I was calculating today the cost of a California Fair Plan policy for limits of about, again, between 300,000, 400,000. That's the median fire coverage in California, or at least the Bay Area. And if you write that policy through the California Fair Plan for the given coverages that you can get, you're going to be paying no less and no more than the ordinary insurance company.
Okay.
They're not. It's not going to deviate very much from the ordinary insurance company cost.
Okay. Thank you, Dave. I just want to help me clarify to everyone out there, just to know that they need to also look at their policies, because if they go for a claim, they do not want to be in shock, because I noticed that there's certain things that may need to be added in order for it to be covered, like debris removal, personal property, and those kind of things. Like when your house burns down, there is that debris removal, and those things are added, right, to the policy, and they're not included.
Yes. You mentioned customers should read their insurance policy. So very true. More than your car warranty booklet, insurance policy is so important. Call your insurance agent, have a dialogue with him or her, and ask questions. Don't be shy to call your insurance agent. That's what they're there for. Use them as much as you can. It's very important that the client take the initiative to view the policy and see how much coverage they have, because at the end, you're going to be the one to suffer if you don't have enough coverage.
Yeah, and that's the advantage of having someone who is knowledgeable in the field, like you, Dave, with all these
Yeah.
years of experience. And I'm happy to say and excited that Dave is right here in San Jose, right? And he, with so many years of experience, is someone who can coach new clients and say this or that and be able to answer. So that's a really good advantage to have someone like that to call and knows what they're doing and have seen a lot of incidences, have seen what happens when people don't ask the right questions, because we don't know what we don't know. We didn't go to school and learn like, oh, when you buy a home, your homeowner's insurance should do this, and you should ask, these things are not taught to us. And unfortunately, even when we go through the process, sometimes it's not clear to us, on what we need to make sure it's covered until something happens. And then we know like, oh, I thought they're going to build my house, but I have to pay for the debris removal. And that could normally cost a lot of money. Am I right?
Debris removal in California, because they're environmentally oriented. Yes, you can't just go dump everything. A lot of times you have to separate by item. Wow. So yeah, it's very costly, especially if you're talking about total demolition. Mm-hmm. Yes, it could be very, very pricey. And again, you're talking about advice, insurance agent, talk to your insurance agent, have an insurance agent. Don't call an 800 number. Yeah. This job that we have, Melvina, yes, it comes with a lot of risk, a lot of stress, a lot of thought, because when we talk to somebody and we don't give the right amount of coverage, we could be sued. We have errors and omissions, and we're responsible for the coverage that we offer to our clients. Whereas you call an 800 number, who do you talk to? Who are you going to claim against? Who are you going to sue? You're on your own. So yeah, this job that we have, it comes with a lot of risk, but we enjoy doing it. We've earned thick skin throughout the years. So, we're suited for the job.
Great. Thank you so much for taking busy time to chat with me here. And I have to tell my audience that this was also a short notice that I did that. So I really appreciate that you can come. And that's the type of person that Dave is like, let's get this information out for people so that they know. And so I really do appreciate it. And I am going to challenge all of you listening, even though you don't live in California, wherever you live, you own a home, check your homeowner's insurance. Make sure you know what's covered in it. Don't make the assumption that everything is covered. And if you live in California and you're going through right now and you're looking for fire insurance, or even if you have your home, and you can contact Dave and discuss that and see how he can help you. So thank you, Dave, and say thank you to me, to your wife, Linda. Yes, I know she's helping back there. And I appreciate both of you, and I look forward to working with you more. Yes,
and I know that you now have a real estate license, and you're a loan agent as well. Yes. And today you just passed Insurance 1A. So if you decide to get your license, I will give you a recommendation.
Thank you. Thank you. I'll keep that. I appreciate that, Dave. So you have a wonderful evening, and I'll be chatting with you soon. So bye, everyone there in Facebook land, and I'll catch you next week on Think Beyond the Keys. Goodbye.
Goodbye.